Good evening, all of you. So, welcome to this JMC V-Learning. Today, as you all know, we are going to discuss about economics paper, right? How your structure will be given to your economics according to the syllabus, right? Then this paper I prepared regarding the section. So section A, it's about MCQs, some are fill in the blanks. There are questions, the short answered level. So you can do many past papers available in the website. So this is why I have taken, it's about 40 marks allocated for section, the 20 marks allocated for section C. So if you see this structure in section B, it's starting from question 2. It means question number 1 is about MCQ level, right? So here question number 2, 3, 4 and 5. It means 4 questions are given under section B. Each question is carrying 10 marks. And there's another 6th one included in section C. It's all together given with 20 marks. Okay, then let's move into the discussion of very first question. It's given with A, state 3 characteristics of non-economic goods. Right. So what is goods in economics? What is goods? What you say good? There's no that tangible or intangible, visible or invisible, anything we can take that provides you positive satisfaction. Okay, anything, right? So this goods, anything providing positive satisfaction to you, that can be classified as economic good, non-economic good. So economic goods are man-made things, whereas non-economic goods are gifted by nature. So economic goods, since it is produced by man, there is utilization of resource cost, there is an opportunity cost, there is production cost, limited in availability. So these are the characteristics can be included in economic goods. So what is non-economic goods? They are free goods. Okay. So I said the word free. Although the things which are given to you as gift, like now government providing you free education, free health facilities. So although the word is there with free, they are not free goods. I told free goods are the non-economic goods which are gifted by nature. So free education, free health are given by nature? Nope. So please be careful with the words. Economic goods are man-made. It is created by man. Whereas free goods, cost-free goods, natural goods, non-economic goods, these are gifted by nature. So here I asked to state. Okay, state means you want to point out what are the characteristics can be given under non-economic goods. So the opposite side of economic good you can state. What is that? Non-economic goods are what? Gifted by nature. Number 1 you can say as what? Gifted by nature. So in question number 2, it's about section A. You can see it is gifted by nature. It is gifted by nature. So will be there any resource cost? No. So there is no resource cost. So there is no resource cost. No opportunity cost. Nothing to sacrifice. So no opportunity cost. So what else? No production cost. So here I added Four characteristics, right? Okay, so it is gifted by nature. No resource cost, no opportunity cost, no production cost. So like any of the three characteristics can be given as answers to non-economic goods. Okay, is that clear? So stating you can get 3 marks for that. Right, then B. Explain briefly how the basic economic problems are solved in free market economy. Right. What is known as basic economic problems? So these are the central problem faced by each and every economy in this world. So it can be any country in this world. Everyone is commonly facing this problem. So what are they? What to produce, in what quantities, how to produce and whom to produce. Okay, what to produce, how to produce and whom to produce. So since these problems are common to all the countries are not taking the same strategies to solve these basic economic problems. Okay, they have their own expectations, like whether they want to earn profit or whether they can whether they want to provide social welfare or whether they want to give both together. So accordingly, economic systems are created by man to solve these basic economic problems, and accordingly they have their own expectations. So, what are actually these three economic systems established by society? One is free market economy. Another one is about command economy. Another one is about mixed economy. So these are the three basic economic systems can be seen in this world. Although the basic economic problems are common to them, they have their unique way to solve these basic economic problems. So here I asked about free market economy. So free market economy countries are focusing on profit maximization. They are focusing on what? Profit maximization. So the free market economy having basic characteristics like higher, greater ownership goes to private. Meanwhile, limited functions are done by government. They focus on profit and they decide everything based on price. Everything they based on price. So, what to produce, how to produce, whom to produce, separately you want to answer. How? So, you want to say first as the free market economy, then the number one like what and in what quantities to be produced. So here you can say, so free market economy has a profit maximization as objective. Therefore, what and in what quantities will be decided based on price mechanism. Based on what? Price mechanism, where higher profit is given, higher quantities are produced, and lower profit system, lower quantities are produced. So like you want to write some of the content under the what and in what quantities to be produced. The number two, you can say how to produce. So how to produce in what based on what kind of technology they are trying to do the production. They have two different type of technology, like whether they want to use the labor intensive technology or capital intensive technology. Therefore, what is this labor intensive, capital intensive? So here you can say it's the B part. So we are talking about free market economy. So under the free market economy, the first content you are going to say what to produce. So I told Under this what to produce, you are going to write free market economy has an objective of profit maximization. Therefore, they will allocate the resource according to profit level. So, higher the profit, higher the goods are produced in greater quantity, and lower the profit, lower quantities are produced. So, you are going to write under what to produce. Then the number 2 is about how to produce. So how to produce, I talked about. How to produce, I talked about what kind of technology to be used. So here we have two kind of technologies. Labor intensive technology means labor greater, capital work is less. Labor intensive means labor work is greater, capital work is less. Another category you have, capital is greater, labor work is less. Okay, capital work is greater than labor work. So they have the confusion like what kind of technology to be selected in order to do their production. So since they are working on profit maximization, do they choose the technology with higher cost? No. So they will check on the cost effectiveness and the work performance done by the technology. Both they check the effectiveness on cost and the performance. Accordingly, where they can get the combination of technology with comparatively lower cost but higher performance working level. So this is how they solve how to produce under free market economy. Okay, then the third level is about whom to produce. Third level is about what? Whom to produce. So whom to produce means they want to decide whom they want to take as a target to produce the goods. As I said, free market economy has profit maximization objective. They all decide based on price mechanism according to price. Therefore, they target on the people, group of people who have comparatively higher level of income. Okay, so if they have higher level of income, they demand more goods, certain goods they demand. Therefore, those goods they select and produce more. Then only they can earn more income and more profit. Therefore, accordingly, they select what kind of goods given to the people whom to produce. Okay, dear, we are selecting the society. Okay, dear, we are selecting the group of people whom we need to take as a target to produce goods and service. This is how the answer can be given for simple B under question number 2. Explain briefly. Okay, dear, don't write too much but give certain things including profit maximization, price mechanism, where there's the greater ownership of what? Private. So what to produce, they decide based on greater profit level. How to produce is selecting the technology based on the cost effectiveness and performance level. Whom to produce, they decide based on the income level of the each group. Like you want to add some of the words and carefully write under each topic. Okay, don't mess up everything together as a big paragraph. It's very hard to read and allocate the marks. So here you can see under the each level you can write the explanation part, not in a big paragraph. They asked you to explain briefly, right? Okay, so what to produce, how they solve, how to produce, how they solve, and whom to produce, how they solve. Okay, so this is how you want to answer for the section B under question number 2. Right, last one is state the types of factors of production. Okay, it's very basic fundamental idea of economics. Okay, how this economics became very popular among us. Right, we all are living in this world. Am I correct? Yes, we all are in this world. So in this world, God gave limited amount of resources. Right, we have limited amount of resources. So with this availability of resources, we need to choose how our unlimited human wants can be fulfilled. So resources are limited. Another way, human wants are infinite. Okay, it is unlimited, diversified. We have many kind of wants to be fulfilled. So in order to fulfill these wants, we have certain kind of resources. According to economics, these available resources, we can say production resources. Listen to my words, okay? We can say production resources, economic resources, or they can ask in the term of what? Factors of production. To fulfill human wants, we need goods and service. They want to produce. Okay, they are in the process of producing goods and service. How that can be possible? By utilizing these factors. Now tell me, what are the factors we have? Land, labor, capital, and entrepreneurship. What are the factors of production we have? Land, labor, capital, entrepreneurship. So they asked only, now according to my paper, I said state. So state means no need to explain, but anyhow, give the content, like only one by one, not the explanation part. What are the factors, right? Here in the C, you have land, labor, capital, and last one is about what? Entrepreneurship. So last one we have entrepreneurship, right? This land and capital we can say, land and capital we can say property resources, we can keep as property, right? Okay, land and capital we can say as property resources. Meanwhile, labor and entrepreneurship can be named as human resources. So property resources, human resources, these four are the types under factors of production, right? They can ask you economic resources, production resources, factors of production. Anyway, they ask, the answer is same: land, labor, capital, entrepreneurship. So land and capital we can say property, whereas labor and entrepreneur we can say as human resources. Is that clear for you all? The first part of that section B, I'm talking about right now, question number 2. Actually, I did now. So A, B and C, I explained what are the characteristics of non-economic goods. Further, I said what is good, economic good also. And the B part, I explained about what are the basic economic problems and what kind of 3 economic systems can be seen in this world. Accordingly, how free market economy solves these basic economic problems. I explained the structure, how to answer. And finally, it's about what? State 4 types of factors of production, as I said: land, labor, capital, entrepreneurship. Okay, then let's move to the question number 3. So this 3 is about demand, elasticity, tax and subsidy together. One set of question will be given to you. Accordingly, in this question number 3, A is about So I'm talking about question number 3. So it's about A part. So A, consider the following demand function and the supply function given in relation to the commodity. QD equals 100 minus 5P. QS equals minus 50 plus 5P. You are required to calculate market equilibrium price and equilibrium quantity. Okay, very basic stuff from market equilibrium. So what is market equilibrium? You know, a graphical presentation wise we can explain it. There's downward sloping demand line, and there is upward sloping supply line. The point at which both intersect together, that is known as equilibrium level. Okay, this point we say it's equilibrium level. So in this point of view, QD equals QS. Right, QD equals QS. So accordingly, I'm asking in mathematical presentation, what is this equilibrium price and equilibrium quantity? So mathematically, we are going to solve and see what will be the answer for this EP and EQ. So QD equals QS. Accordingly, we are going to substitute the function given and we are going to find what is P and Q. It means EP and EQ. Right. So we will solve according to mathematical presentation. QD equals QS and 100 minus 5P given and minus 50 plus 5P given. Okay, 100 minus 5P equals minus 50 plus 5P is given. Yes. So you know how to solve. The number figures are in one side, P is in another side. So here 100 and these minus 50 we can make as plus 50, right? So minus 50 will be converted into plus 50 and the remaining stuff here is 5P and this minus 5P is converted as plus. So here we have 150, this side plus 10, then P to find out. We are going to divide by this 10. Then what will be the answer of P? 15. So this 15, any of the formula you can substitute, okay? You can substitute in any of the formula. Why? In this level, both are same. So in any function you replace, your answer will be same because it's common, EQ. You see, downward, upward, both are intersecting in the same level. So any formula you can replace, the answer comes to you. So it can be QD or QS. So I'll replace in QD and see. 100 minus 5 instead of P. So this instead of P, I'm going to substitute this 15. Therefore, 15 when you multiply, if I'm correct, 75. Yes, so then 25 units. So don't stop with this working. Finally say, therefore, equilibrium price is rupees 15 and equilibrium quantity is 25 units. How this is the way to solve mathematical presentation under market equilibrium. Is that clear for you all? I guess so. You all understood. Right. Then B part is about what identify two factors that determine the price elasticity of demand. Identify two factors that determine price elasticity of demand. Actually, what is price elasticity of demand? What is elasticity? Responsiveness. Okay, how one factor is going to respond to the change in another factor. So here two factors are given. See, price, elasticity of demand. So if price of the concerned good is changing, how quantity demanded is going to change, the percentage change level is known as what? Price elasticity of demand. Accordingly, we have five types: 0, PED 0, PED less than 1, PED equals 1, PED greater than 1 and PED infinity. So in name wise we say perfect inelastic demand, unitary demand, elastic demand, and it's about perfect elastic demand. Okay, so we have the types how the price elasticity of demand is determined, on what basis. Okay, on what basis? Very first basis you can say nature of the good. Very first thing we can say nature of the good. So very first we can say it's about B part, nature of the good. So nature of the good means whether that is essential good or the luxury good, right? Okay, we can say whether that is essential good or luxury good. So essential goods, we say it is less than 1, whereas luxury goods are known as greater than 1. So nature of good says the price elasticity of demand category. The number 2 we can say number of substitute goods available. Number of substitute goods available. Number of substitute goods available. So now tell me, you have only less amount of substitute goods. Okay, let's see like an example. According to broader term, vegetables, right? If vegetables price is now relatively expensive, can you quickly tell what are the other substitute goods available? I'm talking about a group of vegetables, okay? The everything together vegetables. So vegetable price is going high now. So do you have marvelous amount of substitute goods at the market? No, now you can't go quickly to switch to consume another good. So it's less than 1, very hard to find out other substitute good available at the market. Okay, right? Now narrow term, let's see, carrot price. Suppose carrot price is high, do we want to really rely on carrot? No, we have other type of substitute goods available, we can quickly move. So we have great amount of substitute good, so the answer is also greater than 1. So number of substitute good available also determining what kind of PED will be taken. Okay, then the next thing we can say, how much income we spend. Income proportion. Income proportion, right? So have you seen your dad or mom buy a monthly budget goods to your place? But whatever you buy, minimum around 30 to 40, like you spend 30,000 to 40,000. But luxury good, can you buy large quantity in this 30,000, 40,000? Even that is not enough to afford a luxury good to our place. Therefore, how much income we spent? Accordingly, less than 1, greater than 1. Okay, so greater than 1 means greater the income you spend, you will highly reacting to the price level. Lower the income you spend, lower the reaction you make towards those goods. Right? So that electronical item, durable goods. So these durable goods, slightly the price increase, you feel very stress of bearing the cost of that certain product. But although you buy necessary goods to your place, it's comparatively less change comes to your price. Therefore, how much income you spend, that is another type you can say determining price elasticity of demand. So, this is how you can answer to B part. Right? And the C part is about explain consequences of imposing tax by the government to producers on essential goods using a graph. Explain consequences of imposing tax by the government to producers on essential goods using a graph. So, it's right. It's also starting from market structure, quantity, origin, price, downward sloping demand line, upward sloping supply line. So the point is equilibrium level and equilibrium price and equilibrium quantity. Right. Now, tax is imposed on supplier. Then will be there any change in demand line? No. Because here I said the tax, unit tax is now imposed on suppliers. So supplier means it's about the supply line. Due to imposing tax on supplier, are they really encouraged to produce more? No. So they are discouraged and the supply line will be shifting to leftward. Shifting to what? Leftward. So we are going to draw leftward supply line and the line is named as STY. It's supply after tax. S is the original line. ST is about supply line after tax. So now this is your new equilibrium and you can see new equilibrium price and a new equilibrium quantity. So E1, E1P and E1Q. So what are the economic consequences of imposing the tax? Imposing the tax on supply line. Okay, I'll make the points accordingly. You can write the statements. Okay, no problem. The answer script will be sent to you later. Now I will explain you the point forms. What are the consequences can be included. Okay, very first, no change in demand line. Is there any change in demand line? Is there any change in demand line? No. So it remains constant. So is there change in supply line? Yes, it is going to shift to leftward. Okay, supply line is going to shift leftward. Right. What does happen to E1P? Increases, no? You see, price has gone up and quantity has decreased. Price has gone up, quantity has decreased. So you can say equilibrium price has gone up, so it increases and your quantity decreases. Okay. Now I'll come to some certain points. Before tax is imposed, right? We are here, okay dear. So now after tax we are here. Now before tax we were here in this equilibrium point, right? Now tell me, after tax our price is C1Q and what will be our price? E1P. Now we are trading this E1Q at market, okay? At what price level? E1P. Now my question is, the same E1Q, okay, same E1Q, if there is no tax. Now we are trading the quantity E1Q at E1P price because it's about tax imposition consequences, right? Now my question is, if the same E1Q to be traded at market with no tax, where should it intersect? Original line. See, it should intersect this original line, this quantity. Now this quantity we are trading currently to E1P. Now my question is, same E1Q to be traded at original supply line means it intersect here. Therefore, actually this should be your price. Okay, this should be the price. The E1Q should be traded at P. But currently we are purchasing at what price? E1P. Right? Okay, we need to pay P for this new quantity E1Q. Actually, currently we pay E1P because of what? Tax. Therefore, this entire portion will be tax. So government generate tax revenue. Government generate tax revenue. Okay. Earlier, where did you trade earlier? Here, no? You traded here. At what quantity level? Here. Now you traded here. Therefore, earlier you traded this place and you came inward. Okay, you came inward. Then did you enjoy this space? Because see, I said we were here before tax. Now we came to this position. See? So therefore, no enjoyment from this level. So we say there is dead weight loss. Right, earlier we traded in E1Q. Now we are trading at E1Q level. So there's no space will be enjoyed by consumer or producer. Why? Before tax is imposed, right? Before tax is imposed. Okay, now listen to this. Whose surplus is this? As you learnt earlier, consumer surplus. This is known as whose surplus? Consumer. This is now whose surplus? Producer surplus. So these together we say, this big triangle we say economic surplus. Okay, upper triangle is consumer surplus, below the triangle we say producer surplus, and that big triangle together with consumer surplus and producer surplus we say that is economic surplus. That's what I told you earlier. You enjoyed this level, no, this big triangle. You enjoy the big triangle, but now you came inward. You came inward. So will you enjoy this space? I mean, as a consumer or as a producer, can you enjoy? No. Therefore, there is deadweight loss. So there is occurrence of what? Deadweight loss. Okay. Now, I told this is the bigger triangle earlier. Bigger triangle earlier. I said economic surplus, right? And this triangle is about consumer surplus. And this triangle is about producer surplus. Then this one, no one enjoyed. That's what we say deadweight loss. Now we have only this space. So you can see the trapezium. You can see the trapezium. And this entire space is paid as what? Tax. Entire space is paid at what? Tax. And you know, although this is paid as tax revenue, the area has split into two. This is the consumer area, this is producer area. This is the consumer area, this is the producer area. Therefore, this area should be borne by consumer. So, consumer should pay this space. And this should be paid by whom? Producer. Why? This area is from the producer triangle, no? Yeah, therefore this entire rectangle will be paid as tax revenue to government, and above the part will be given to consumer. I mean it is borne by consumer, and this is borne by producer, and together we will pay to government as tax. Therefore, now what kind of areas are left? This and this. Therefore, this will be the new consumer surplus. New consumer surplus. and this will be the new producer surplus. Now the new consumer surplus, new producer surplus has increased or decreased? They have decreased, right? Okay, because this is the entire surplus they enjoyed. Now this only they enjoy. This is enjoyed by producer, but now kind of this space only enjoyed by producer. Therefore, another point you can add. Another point you can add, consumer surplus and producer surplus decrease. So these are the main economic consequences can be seen by imposition of tax at the market on supplier. So no change in the demand line, supply line will be shifting to leftward, equilibrium price has gone up, equilibrium quantity has decreased, came to the leftward, and there's the part paid as tax to the government, one part borne by consumer, another part borne by producer. This one is not going to enjoy by anyone, that is known as deadweight loss, and this triangle we say new consumer surplus, and this we say new producer surplus. So take a look whether you understood or not, then we can move to question number 4. Yes, I guess everyone understood. So we completed discussing about question number 2 and the third part. Now we are moving into the discussion about question number 4. Okay. So it's about central bank monetary policy, and before that it's about money. What is money? What are the functions of money? Right? Demand for money, money supply, central bank, commercial bank, monetary policy, like kind of some of the things will be discussed in this part. Okay. State 3 motives of demand for money. So what are the demand for money, you know? Huh? Actually, what is demand for money? You have any idea? Okay, we will start from then money. What is money? What is money? Anything you can use for exchanging goods and service, but that should be generally accepted by legal system. And anything means, can I give this paper instead of goods and service I get? No. So that should be generally accepted by public, and that should be accepted by legal system, and durability there should be there. Okay, likewise money is anything that you use to exchange goods and service. Accordingly, there are 4 functions of money we have. They are medium of exchange, unit of account, store of value, and standard of deferred payment, right? So excuse me. Right. So there are 4 functions of money. First one is medium of exchange. Now you want to get goods and service. So in return you want to give something else, no? So money plays as medium of exchange. Then what is unit of account? Unit of account. Each and everything to be measured, valued. Money should be there. 1 pen, how much? 1 kilogram rice, how much? Right? Half of the packet, how much? 1 liter, how much? Likewise, in order to account the goods value, money should be there to evaluate this amount. Okay, that is about what? Unit of account. Third one is about value of store. You keep wealth in terms of what money you save, in terms of money you save. So that is about what? Value of wealth or value of store, we can say. Last one is about standard of deferred payment. It means currently you do the transactions, but later you settle. So later you can pay by money. So money helps you to do credit transactions at present. That's what this mass production and economy has developed. Now we are doing many activities. Okay, then these are the main 4 functions of money. But here I asked about what are the 3 motives of demand for money. Actually, demand means willingness. Demand means what? Willingness. So, willingness for money. It means what? What's your preference? Okay, what are the reasons to keep or to hold money with us? Okay, what are the motives? What are the reasons? Why are we willing to keep money with us? General thing. Why do you want money? To get goods and service for your regular routines to survive in this world. That is known as transaction motive. So I am talking about question number 4. It's about A part. First one for the transaction motive. Right. On regular basis, whatever you do, you want to pay money. You want to get goods and service to survive. So you want to pay for them. So that is about what? Transaction motive. Next one, suppose something happens. I mean, unexpected things. We need to pay the bills or any medical accidents or anything. So likewise, illness, to make a repair of your vehicle, anything can happen. For that, if you keep money with you, for any emergency level, you keep money with you, it's about precautionary. Okay, precautionary. So it's about what? Precautionary purpose. Last one is about speculative. It's about what? Speculative. What is the meaning of speculative? To generate some income. So in order to generate, in order to invest somewhere else, and in order to generate any income, if you keep money with you for that purpose, it is about speculative. So there are 3 motives of demand for money. So one is about transaction motive, another one precautionary motive, and last one is about what? Speculative motive. Transaction means on regular basis, anything you want to buy, you want to keep money with you, it's about transaction. For any unexpected events or emergency cases, you keep money to resettle them. That is about what? Precautionary. First one is transaction. Second one is precautionary. Third one is about speculative. Speculative means by investing in order to generate any income level. For that purpose, you keep set of money. It's about speculative motive. Okay, so that is 3 motives about demand for money, right? And the B part is about explaining the objectives. Okay, explaining the objectives of Central Bank of Sri Lanka. You know CBSL, he is the head of the country. Right. They have 2 objectives. Here I asked you, briefly explain the objectives of Central Bank of Sri Lanka. Okay, briefly explain the objectives of Central Bank of Sri Lanka, right? So, there are the objectives, only 2 objectives. Very first one, maintaining price stability. Last, I mean the second one, financial system stability. Right? So in this case, central bank always keeps an eye on these two objectives, because if they fail to maintain these objective, entire economy will be collapsed. Very first one, ensuring price stability. What is the meaning of stability first? With no fluctuation, right? Okay, stable. Actually, the stable, practically, here we mean about lowering the inflationary pressures. It is impossible to keep the price like this. Can we maintain price like this? Nope. But lowering the inflationary pressures, okay, lowering the fluctuation. Suppose your economy is moving like this, it's not good. Okay, it is not possible to maintain, and it is not good to the economy, and we are trying to lower the inflationary pressures in an economy. That is about what? Price stability. We say that is about what? Price stability. Then what is about financial system? Financial system is about group of financial institutions, market instruments, infrastructure facilities, regulatory bodies. So these all five components are included in the financial system. So they want to keep an eye, they want to ensure they are free from any collapse. Okay, they are away from corruption, any crises, any weaknesses. So we want to ensure they are away from negative vibes. So that is about what? Financial system stability. So basically these two are the two objectives should be taken care by Central Bank of Sri Lanka. So this is the answer you must to write under each topic, okay, about Central Bank. So we are in question number 4. Very first I explained about a demand for money. I mean, what are the three motives of demand for money? And number B is about briefly explain the objectives of Central Bank of Sri Lanka. And the C is about explain two qualitative instruments of monetary policy used by Central Bank of Sri Lanka. Right. Actually, what is monetary policy? So this policy is implemented or used by Central Bank of Sri Lanka to ensure money supply is controlled. Why should they control about this monetary policy? I mean the money supply. If you assume you have more money, what do? You tend to spend more. So if you tend to spend more, automatically general price level will be increasing, because how you ask goods and service, supply is not possible to increase. So once the full employment level is reached, full employment kya putte, all the available resources are utilized in the optimum level. Further, you do not have any resources. Further, you ask for goods, furthermore, you are asking for a goods and goods, they don't have any resources to produce. Then automatically what? General price level will be increasing. Therefore, they are keeping an eye to control monetary policy. They have quantitative instruments and qualitative instruments. So I asked about what are the qualitative instruments, right? So under the qualitative instruments, C part I am talking about, they can control by maturity period of loans. Maturity period of loans provided to public, and changing the rate of interest according to what interest, I mean the what kind of purpose they get loan. So very first one, they are changing the maturity period according to the purpose of loan, and establishing the rate of interest to get on behalf of provision of loan. and the loan guarantees. You can't give loan just with no guarantee. So what kind of loan guarantee you can take? And other limits. Okay, other limits. So for what section you give. And other thing you can add by moral suasion. I'll explain. Right. So here see, maturity period. What is this maturity period? Now, you ask for a loan for a different time period. One for education loan, another one can for your personal loan, another one for a gold loan, or another one can go for a housing loan. Are all the purposes same? No. And can you give same maturity period for everything? Now, a gold loan you give for 1 year, housing loan can you give for one year? No, it's not possible. Okay, likewise, you want to see the maturity period. So, for how many years you can give the loan to the purpose. And second one, dear, it's about rate of interest. So, different purpose, different interest kind of set will be charged. Third one, loan guarantee. So you must ask any collateral. So without collateral, can you give the loan? Never. Now housing loan means you want to show any proof, any evidence. For what purpose you make this loan? They can't give loan with no guarantee. Whom you can trust? Okay, so loan guarantee. At what guarantee level you can give the loan to them? And other limit means you are going to give loan for different kind of sectors. So you are going to set a limit. Okay, agricultural sector how much, or the industrial sector how much, and the service sector. So kind of sector wise you limit them. And last one is about moral suasion. Moral suasion, all the time on regular basis, you supervise them, having the closed door meeting, having the reports. Okay, regularly you supervise and regulating them. So these all kind of procedures are done by moral suasion. This is how they control money supply to the economy based on qualitative instruments used by Central Bank of Sri Lanka from monetary policy. Right, monetary policy basically target to control money supply in an economy. Okay, so we completed discussing about question number 4. Right, so the first question number 2, it's about a non-economic good, how the economic problems are solved, what are the factors of production we did. And the second part, the third question is about, I solved how to do the equilibrium level, price and quantity, how to take the answer, and what are the determinants of price elasticity of demand. And graphically I explained, okay, how the tax imposed and what are the economic consequences can be seen. And right now I completed discussing about what are the 3 motives of demand for money, and 2 objectives of Central Bank of Sri Lanka, and what are the qualitative instruments used by monetary policy from this central bank. Okay, right. So let's move to question number 5. Take 2 advantages of international trade. Actually, what is international trade? Huh? What is international? Trade, you're going to buy goods and service. International, between the nations, between the countries. So international trade is about trading with other countries. And here they are asking, what are the disadvantages of international trade? Tell me some of the general disadvantages you know. There's a chance of importing unwanted goods, harmful goods. infant industries will be damaged, cultural damage, political, some of the issues can be there, unwanted technologies can be introduced. So you want to highly depend on other countries for the goods. So because of that, you want to pay more payment to the other countries. Then we know, and we need to face the deficit balance of payment, and we want to borrow loans. Likewise, we can face many disadvantages of doing this international trade, according to Sri Lankan context I told. Right. And in the B part, I gave the questions. Okay, one table is given. Accordingly, two questions are asked there. So we will go to the question. Use. Country B and country Q produce both products, rice and dal. The following table shows the units of rice and dal that can be produced by 1 unit of labor of both countries. 1 unit of labor of both countries. So when we explain the theories, there are two theories available. One is the absolute advantage theory, another one comparative advantage theory, right? Absolute or the comparative, basically we will take two countries and two different goods, then only we can compare and say how this theory is worked, right? Theoretically we keep few assumptions to explain the theories. So in order to explain this theory, two countries and two goods are given, and this statement says you how many goods can be produced by utilizing 1 unit of labor, this or that. Okay, now I'll copy the table. Okay, so this is the table given. So this side product, column wise country, row wise, P and Q, and column wise product is given, rice and dal, P and Q according to country given. So here under that I have asked, you are required to identify which country has the absolute advantage in the production of each production, 2 marks. And next one, identify which country has the comparative advantage in the production of each product. So that I gave 4 marks because few calculations we need to do under opportunity cost. Absolute advantage to be applied, it's very easy method. Before that, see, P is one country and Q is another country. P can produce 100 rice or 60 dal by using 1 unit of labor. Q country can produce 40 units of rice or 80 units of dal by utilizing 1 unit of labor. Okay, now you have the confusion which side to be answered, whether row wise selecting or column wise selecting. Make a question at yourself, what are you going to produce? Whether you are going to produce rice and dal or P and Q countries. Can you produce countries? Nope. Then what are you going to produce? Rice and dal. Therefore, where the production is given, accordingly you are going to choose, right? Okay. Maybe you having the confusion, row or column, see which side the product is given. Accordingly, you are going to choose. Now, rice, dal given in the column wise, absolute advantage telling you which has the highest answer, that country is selected. Now, see rice. 140, which has the highest, then 100. So rice, you have 100 as the highest answer, then you are going to choose the P country. Dal, You have the AT as the great answer. Then Q country is selected. This is how you are going to select under absolute advantage. Then you will say P country has absolute advantage in the production of rice and Q country has absolute in the production of dal. So they can exchange by producing the each production. Now P will produce rice and they can export to Q country, and from the Q country they can import dal. Likewise, they can involve in international trade effectively. This is how absolute advantage theory works. Okay, then the next thing is about what? Next thing, how the comparative advantage is selected. Okay, now I'll erase and go on because it's about opportunity cost, right? Or I'll do on that side, then you will understand. Rice you have, dal you have. 100, 40. P country, Q country. Here 60, 40. Oh, sorry, it's about 80. Right. So 140, 60, yeah, 60, 80 under the dal. Now, comparative advantage theory is solved based on the application of opportunity cost. Okay, what is opportunity cost? What you sacrifice to choose as best. Okay, what you sacrifice to choose as best. Therefore, formally we say, what is the value forgone in the next best alternative to choose the best alternative? So, to choose the best alternative, what is sacrificed from the next best alternative is about what? Opportunity cost. Therefore, opportunity cost is calculated by forgone units. Forgone units divided by increase units. Okay, forgone units divided by increase units. Okay, now assume I told P country can produce 100 or 16. Suppose they produce rice. What do they want to sacrifice? 60. So, forgone units divided by increased units. Therefore, rice you have, dal you have, P country and Q country we have. So, under the rice, 60 units forgone to produce 100. 100 rice to produce, you want to sacrifice 60. Then how many dal you want to sacrifice? 0.6. Suppose you produce dal. 100 rice you want to sacrifice to produce 60 dal. 100 rice units you want to sacrifice to produce 60. Therefore, 1 dal to produce 1.67 rice you want to sacrifice. Again, I am coming to the point. Opportunity cost is about forgone units divided by increased units. So, 100 to increase, 60 units you want to sacrifice. Dal 60 units to produce, 100 units of rice to be sacrificed. Accordingly, we found out the opportunity cost. Likewise, Q 40 to produce 80 you want to sacrifice. Okay, 40 to increase, 80 you want to sacrifice. Therefore, one rice to increase, 2 dal you want to sacrifice, 2 dal. Likewise, 80 dal to produce, 40 rice you want to sacrifice. 80 dal to increase, 40 rice. It means 0.5. It means 0.5. Okay, now listen. Comparative advantage to be done. You want to follow opportunity cost formula. It's about forgone units divided by increased units. Then country ne pute want to produce another product, they sacrifice. So country wise you want to do the opportunity cost. But finally, the story is same. You want to choose a product, not the country. Now, product-wise, see, product-wise, what has the least opportunity cost? 0.6 or 2? Are you willing to sacrifice 2 or 0.6? The lower answer. Therefore, the lower one will be selected. Under the DAL, do you like to sacrifice 1.67 or 0.5? The lower answer, 0.5. So, you select the 0.5. Now say rice, P country, dal, Q country under the comparative advantage theory. Comparative advantage theory. So please have a look whether you understood or not. I guess so you all have understood, right? So another last question is remaining under question number 5. What are the two causes of inflation? What is actually inflation? So inflation is about continuous increase in the general price level. Continuous increase in the general price level. So that causes inflation. Right? Continuous increase in the general price level that causes inflation. So what can be the two reasons that causes inflation in the economy? There are two reasons. One is the demand pull inflation. One is the demand pull inflation. Another one is the supply push inflation. So these are the two reasons for inflation, right? Demand pull, supply push. Demand pull. What is the meaning of demand pull? Right. So demand pull inflation as there's no change in supply. Okay, no change in supply because we can't expand beyond the level. But you're asking for a more good. No change in the supply, but you're asking for a more good. Automatically price level will be what? Increasing. Okay, no change in the supply, but you are asking for a more good. So more good means automatically general price level will be what? Increasing. That is what we say about demand pull inflation. The second one is about supply push inflation, right? So there can be many reasons leading to decrease in aggregate supply, decrease. Okay, increase in the raw material price, increase in the price level of other inputs, labor wages increase, taxes imposed, so lower amount of subsidy by any way, stricken rules and regulations imposed. So in any way, if supply is decreasing, with no change in demand. Demand remains constant, but you are decreasing the quantity. I explained in the tax also. So if decrease in the supply, it leads increase in the price. So it causes general price level increase in the economy. So I did not ask to explain, but for your knowledge, I said you can go through the syllabus we have. Therefore, it's about only to state. So state means 2 marks, demand pull inflation and supply push inflation. So now we entirely completed section B. It's about question number 2, 3, 4 and 5. Now we are going to talk about question number 6. Okay. Section C, totally 20 marks. And it's about question number 6. A part state three phases of business cycle. Okay. So before I go to the answers, what is business cycle? Right. So over a period of time, you have a plan. Okay, now you are actually planning your life. Now, how are you planning your life? Okay, completing this stage 1, stage 2, stage 3 after doing chartered or SIMA or ACCA, other professional courses or academic courses, getting a good job, having a family, a house or a car. Likewise, over a period of time, you plan upside with no any fluctuation in between. Do you think it's about a problem comes? No. Therefore, according to the time, over a period of time, potential output will be estimated with no any fluctuation. So this is known as what, dear? Potential output. Potential, that is the chance, maximum level, how many units can be produced. Now, actually, are you achieving everything with no any fluctuation? Now, how many problems, how many struggle you get before you do this AAT one? Likewise, think about your life. Then, actual output will be going like this way. Anyhow, you are improving yourself. So, this is about what? Actual output. So potential output with no any fluctuation. See, potential means it's a chance of achieving. Yeah, it's of course possible, right? Passing this AAT, SIMA, chartered and having other the blah blah things in your life, that is possible. But in order to achieve, actually you want to face many struggles. So the actual fluctuation in real GDP over a period of time is explained by this business cycle. So business cycle says you the real fluctuation that you can see over a period of time in your GDP, gross domestic production. Okay, then what is cycle? Again and again you are going to face the same thing. So the highest point in your cycle, highest point is peak. Each and every cycle, see, all the highest point is peak, but they all are not same, because actual, are they occurring according to the perfect measurement? You have the positive feedback or negative feedback, the downward, upward. Are you getting an exact measurement? No. Okay, so in your each cycle, whatever you get as the highest, that is your peak. Whatever the least you get, trough. Highest point is peak, least point is trough. The sudden drop in your market, I mean the economy, recession. Recession. Sudden drop. And after that, you recover back. After that, you recover back. Expansion. Or you can say recovery. Right? So peak, recession, trough, recovery. Again, peak, recession, trough, recovery. Peak, recession, trough, recovery, like it will be going on. That is known as the 4 phases of business cycle. Then I asked you, state 3 phases of business cycle. You can write peak or recession or trough or recovery. Out of these 4, anything can be taken. So further I explain something you want to get to know regarding this business cycle. The gap between, or the time period you get to go for another peak. The time period from one peak to another peak is known as length of business cycle. Length of what? Business cycle. Length of what? Business cycle. Okay. There are 4 phases: peak, recession, trough, expansion. Again, peak, like it's moving on. One peak to another peak, the time period taken to reach another top is about length of business cycle. It never be equal. I told you, once the actual thing is happening, then only you can find what is the time period. So you can't tell exactly what is the time period unless it is taken place. Okay, right. So this is your potential. This is your actual. If your actual is more than your potential, because this is potential, so this is potential, you achieve more. If you achieve more, we say that is the positive output gap. Output gap. So output gap is the difference between actual and potential. Output gap is known as the difference in between of positive and potential and actual. If your actual is greater, you achieved more than expected level, positive. Then if you achieve less, what is that output gap? Negative output gap. That is known as what? Negative output gap. So, one peak to another peak, the time period we say, the length of business cycle, and the difference between potential and actual we say output gap. If actual is more, positive; if actual is less, negative. But I asked only the 3 phrases out of 4. You can write any of these 4: peak, recession, trough, expansion. Further I explained the summary about this business cycle. Okay, right. So under the question number 6, B part, one hypothetical economy data is given. This is about the national income accounting. As you know, there are 3 approaches: production approach, income approach, expenditure approach. But looking to the trend, expenditure or income, one of these 2 are tested, you can see. But anyhow, don't I did not mean don't study the production approach. Please look into that and go. Okay, any of the statement can be asked. But here I have given some information, the data related to one hypothetical economy. Accordingly, the questions are requested here: gross domestic expenditure, gross domestic product, and gross national income. So how this statement can be prepared? Can you see all are in expenditure? So what kind of statement we are going to prepare? It is about production base, or income base or expenditure base? What kind of method we are going to follow? Expenditure approach, right? Okay, this information says you it's about expenditure approach, right? So here everything is given. Now we are going to talk about the statement final consumption expenditure. So it is the addition of C and G. It means private consumption expenditure, government consumption expenditure, right? Final consumption expenditure is the part of adding together private consumption expenditure and government. So private is the letter we say C, government is denominated by G. There the two answers are given, 1800 and 2300. So you have 4100. So next thing is about gross domestic capital formation. Gross domestic capital formation, it's about I. There are three things included: fixed capital formation, change in inventories, change in valuables. Okay, what is capital? So you know this capital is about a man-made assets, right? So capital is about what? Man-made assets. So one is the fixed capital, more than 1 year any fixed capital is formed, that is about fixed capital. Inventory is about the change in the market value between what? Raw material, finished good, semi-finished good from the beginning year to ending year. So what is the difference between the market value of these three kind of inventories? Valuables. So it is the difference between what you purchase and dispose. So what are the valuables you have? Jewelry, coins, stones, precious, anything, the art objects, stamps. Likewise, you can see that they are under the valuables from this expenditure approach. So accordingly, fixed one is 4100. Yeah. And a change in inventories, I gave a stock 2600 and a change in valuables 2750. So we need to take the total. We need to take the total. So there's a 4000, 4100, 2600 and 2750. The total is 9450. So these together 13,550. This 13,550 not in just, it is about million. This is the answer of gross domestic expenditure at market price. Gross domestic expenditure at market price. It means it is the addition of C plus I plus G. Normally we say in the flow of C, I, G, but here we grouped under the final consumption of C and G, I. Anyhow, they are the addition of what? C plus I plus G. Okay, gross domestic expenditure. Gross domestic expenditure is about how much you spend on goods and service. Actually, do you spend only on domestically produced goods? There are some part you have imported. From that imported goods also you have consumed. So can you tell that is your production? No. Therefore, imports you want to remove from this. And there are some certain goods and service you did not spend but enjoyed by someone else other than us. Exports. So exports are our goods, imports are not our goods. So after adjusting, you can find what? Gross domestic production. You can find what? Gross domestic production. Therefore, you want to add expenditure. Under the expenditure, you want to add exports. And you want to deduct imports. Okay? Exports and imports, you want to deduct. So exports given as 2,350. And imports it's given as 2,150. Then the net answer is 200. Is that clear? Yes. Exports 5,350. No, it's my error. 5,350. Then you have 3,200 net answer. Okay. Then how much you have? 16,750. 16,750 million. This is known as gross domestic product at market price. Gross domestic product. So gross domestic product, to find out whatever you have spent in that, imports you want to remove because that's not your product, but some of the goods you did not spend, therefore that is exported, then that should be added. Then we can find out what? Gross domestic product. Then finally, net primary income is given. After adjusting this net primary income with this GDP, gross national income, can be found. Net primary income is given in bracket 1810 net primary income. After adjusting, you can get gross national income at market price. Gross national income at market price. Okay, how much is the answer? Is that correct? 4940 million. Yes. Yeah. This is how the statement is done under expenditure approach. Okay, take a look and see whether you understood or not. Okay. So I guess so you understood. Now let's go to the C part and D part. What is the difference between gross domestic income and gross national income? Okay. Sorry. So gross domestic. What is the gross domestic income? Domestic is about the geographical area. Within that, what is the income you made? Gross domestic income is the income what you generate within the geographical area. But although we say domestic, some are generated by non-resident. Again, listen to me. Gross domestic income is the one generated in the particular geographical area. So, some out of these are not generated by resident. They are non-resident. What they do? They will send to their motherland. Their primary income, they will send to their motherland. Any employment salary or rent income, investment income, interest income, that they will send to them. Likewise, in other countries, we say rest of world. If our people there, they generate their income, they send to us. After adjusting these two income, we can find out actually what is our residential income. That is known as what? Gross national income. Domestic income within the geographical area, how much the income is generated. Within that, some are not generated by us. They are non-resident people. They will send to their motherland. Likewise, our people in other countries, we say rest of world, they will send to us. We remove non-resident and we add resident in other country. Then you get what, dear? Gross national income. Okay, that is the main difference between GDI and GNI. Okay, now we are in the last moment. What are the policies? What are the policies implemented by Central Bank of Sri Lanka? What are the policies implemented by Central Bank of Sri Lanka? There are many policies, for some focusing some of the matters like monetary policy, focusing on money supply, fiscal policy, monitoring on government activities, international trade policies, focusing on international trade, supply side policy to promote the supply side. Likewise, any of the policies you can add here, the marks will be given because it's asked about state 3 policies. Right? Then we discussed about entire paper, section B and section C. So there are 4 questions, each carrying 10 marks in section B, but 20 marks under the question number 6, section C. Altogether 60 marks of the paper we discussed, right? But anyhow, I wanted you to give 2 information. One of these 2 can be tested in your MCQ from Central Bank annual report. Okay, 2024 annual report wise, one of these 2 can be tested. Please remember and go, trust me. One can be per capita GDP. Per capita GDP means how much dollar can be given to a person from the gross domestic production per capita, not capital. Some are making mistake of adding the L also. No, that is not capital, capita. Per capita GDP is about how much dollar can be shared to one person in an economy. That is according to 2024, $4,516 USD dollars. Okay, dollars. US dollars, $4,516, $4,516. Or they can ask you GDP growth rate. GDP growth rate. So I have more focus. This can be tested. It is 5%. Okay, it is 5%, right? So one, it can test from per capita GDP 4,516 US dollar, or GDP growth rate can be tested. Now according to Central Bank 2024, the percentage is 5. Okay, so are you all happy with my explanation part? Did you all understand clearly what I explained about 60 marks of the paper? Huh? Yes. So I feel so happy to explain you and discuss this part of time with you all. So have a great day. Go through the paper and please study hard, get pass and go to level 2 and 3 successfully. And we will meet if possible in next any paper discussion. Okay. God bless you all. Bye again.